An FOMC meeting that's underway today and works into tomorrow. Now, at the end of that tomorrow, and I believe it's at 2 o'clock Eastern time, we'll get the decision from the Fed. Will it be a rate cut or will we hold rates steady? Right now, the bet is for a 1/4 percentage point cut. We'll talk more about that in just a moment. Let's go to the markets. And the corn market in Chicago, down 2 1/4 at 442 3/4. The December's new crop at 436 3/4. It trades down 3 1/2. Over to the soybeans again. Flash sale overnight to Mexico, 174,000 metric tons. That on corn. What about soybeans? Flash sale 187,000 metric tons to Spain overnight, and another 132,000 sold, 132,000 metric tons sold to unknown destinations. Front month at 974 1/4, it's down 7 3/4, and the March dime lower 976. Over to the wheat market, we'll start with Chicago. July 561 3/4, down 5 3/4. For Kansas City, July down 6, 568 1/4. Spring wheat, Minneapolis, March down 3 3/4, 596 1/4. And finally to the cotton market, 36 lower on the front month, 68.70, 69.89 on the December. That will be next year's new crop, down 44. All right, Chris Swift is with Swift Trading, and Chris. Again, we only have a few days left of this full trading week, and then we roll into next week, and
just
all bets are
2
off.
weeks.
Yeah,
Absolutely.
So what are you watching?
You know, we're really not doing much of anything right now except planning on what we're going to be doing next year. You know, we look at prices right now and the way the markets have been trading. Soybeans now have lost their 10 handle all the way across the board. So we're probably going to be interested in wanting to basically own soybeans at some point in time. We see these new lows in here, and we know that sometime in the first of the year should start to get some kind of increased demand as we come back in for both the oil and the meal markets. Then we see the corn market, and it's triangulating. It's continued to kind of just sit here. And when I look at corn and know that we're really buying some of the most expensive cattle and putting them on feed right now, and even hogs to an extent are still elevated. Poultry production still elevated. So we're going to need some of these factors out there in the soybean meal and in the corn. And while they're less expensive and while the volatility has been very low on these markets, it's a great time to own some options. And what we're doing is we're turning variable costs into fixed costs.
All right. Let's take a quick break, and when we come back, I really want to dig into the livestock market and cattle in particular. So hang on, we're coming back. Market Day Report continues after this. Live cattle, and we'll go to that in just a moment, but cash cattle trade last week was definitely higher. We started the week last Monday at $191 in the South, and packers bought nearly everything that was available and then started going north and had to pay a little more. So where will we go this week? Will sellers in the South be willing to settle for $191? We'll find out in a moment when we talk with Chris Swift. First off, live cattle market is open and trading and up 52. 192.55 on the front month, with February at 190.30, and that's 32 higher. What about feeders? You know, when I look at the feeder market, feeders have been down 3 straight sessions now, trying to rebound on a turnaround Tuesday, January 256.32. It's up 77 on the front month. And the hog trade has been up nearly 23% year to date. February, a couple of pennies higher, 83.57, higher for April, but lower on the May contract. So kind of started with the cash cattle as we bring back in Chris Swift with Swift Trading. And again, interesting what I read, how there were a few who sold last week early on that weren't real happy that they had to take 191.
Well, the interesting point is the interest in the market. Open interest has continued to swell. We are looking at 2 very dividing factors here between the buyers on there and where are they buying. Right now they're buying at the very tip top of the market. those marketing animals, selling them right at the top of the market. So very interesting. And one side that is buying believes just as wholeheartedly that the market's going up as the other side does, believes that it might go down. And I know that it can go as high as it ever wants. It's just, will it go that high? And how are we going to continue to pass that along to the consumer? We're already sitting here going, boy, the resilience of the consumer is just fascinating right now. How is it going to either continue like this or even improve even more? So we look at the resilience of the consumer. A new year comes in. The president has stated, the incoming president stated, we're going to cut things like you've never seen before. We're going to reduce inflation. We're going to reduce some of the spending on it. And again, we just continue to spend at an unbelievable rate right now until we can at least swap our administrations out. So it's going to be pretty interesting at the first of the year.
You know, I had somebody describe it to me as the old Jenga game, you know, where you pull the pieces of wood out and try to keep the tower from falling over. Is that a good way to look at the cattle market right now?
Yeah, kind of. We know that supplies are going to be short. That's the thing about it, is there's no question that the supplies are going to be short of cattle. But what we did in 24 was we increased or leveled out beef production the same as 23 when nobody ever thought that we could. And there is a tremendous amount of verbiage out there about the shortage of cattle, but there is nothing about the increase of beef production. So one hand really falls in line with the other. Even though we may have slightly lower cattle production out there, we have still elevated beef production. That's where we kind of come into the question mark of, we know we're short of cattle, but we're not short of beef.
Okay, and finally, before we let you go, the cocoa and coffee markets have both been on fire based upon just tight supplies and tight growing conditions. Sure. With cocoa, I think up 184% year to date, and I don't have the quote in front of me of where we're going this morning, but the point is, when you start tightening up supply at some point in time, the market moves higher.
Oh, absolutely. No trouble now. I'll tell you a really quick one. Do you know what killed the coffee demand in the years past?
Now, you've told me, but no, let's share it again.
The invent of the one-cup coffee maker. Every morning, my mom would brew a whole pot of coffee, 10 cups, and they drank one or two, and they'd pour the rest of it out. So it did away with the waste.
You learn something every day. It's Chris Swift, Swift Trading. Chris, thanks for coming
Absolutely.
by.
Glad to, Tom.
I've got a one-cup coffee maker out here for you. We'll go get some coffee.
I'm telling you, I will go for a percolator over a Keurig anytime, or a one cup. Yeah. Doesn't matter the brand, but a percolator is just so nice.
Percolator coffee is better than just the drip.
It's
coffee.
the noise.
Have you guys ever heard of the Jura? That's a whole nother story. That is, it'll grind your coffee beans for you. So good. It's a good
Well,
cup
tell
of
us
coffee.
all about it, Suzanne.
No. This is not an endorsement, by the way. Anyway, Merry Christmas to you. You ready for the holidays?
Well. Yeah. Absolutely. I'll be here. I'm going to come back and spend Christmas Eve for a minute or two here.
Oh, that's going to be awesome. All right. Thank you, boys. Appreciate it.